All right, back to those car prices.
Yes.
They're at a record high, and so is the amount of people defaulting on their auto loans.
All week long, consumer investigator Christine Lazar has been showing us ways to save money as more Americans are living paycheck to paycheck. Christine, what do you have for us today? This seems like a really important one.
It is, because your credit is going to take a very big hit if you have your car repossessed. And of course, here in LA, people really need cars to get around. So you really want to get ahead of it and take some steps so you don't end up in that position. According to Cox Automotive, car repossessions are up 43% from 2022 to 2024. And the experts we talked to don't think 2025 will be any better. So it's important to take steps now so you don't end up part of those statistics.
So what is happening right now in the auto market when it comes to loans?
Right, so we're seeing delinquencies go up, especially amongst subprime borrowers.
More than 3 million cars are expected to be repossessed by the end of the year. That's in line with the Great Recession of 2007 to 2009.
We're seeing a record number of delinquencies on auto loans. What is happening?
People signing up for loans maybe a few years ago when the market was at its all-time high in terms of prices. And now just not being able to make payments. And it just feels like the financial pressure that has been building, it feels like it's really coming to a head.
In September, the average new car price reached over $50,000 for the first time, with an average monthly payment of $749. And used cars aren't always the cheaper way to buy anymore.
The average interest rate for a used vehicle is over 10%, whereas on new vehicles, it was 6.9% last month. So if you actually factor in interest rate, and a lot of people like to have very long loan terms, 72 months, 84 months, if you're doing that with an 11% interest rate, it may not work out that much, especially if you have, a 3 or 4 year old vehicles.
If you can't afford your car payment, Jessica Caldwell with Edmunds discourages people from simply turning it in.
A lot of times their car is worth less than what they have their loan for, so they want to roll that bad debt into another loan, and that is a really tricky situation, because what we see there is people have a history of this. They do it once, they do it twice, they do it 3 times, and all of a sudden they buy a $25,000 car for $50,000.
Instead, call your lender.
Especially if you're someone who's never really fallen behind before, and if you have a fairly good loan, they might be able to work with you, they might be able to refinance, give you extra time.
Back in January, the average auto refinance rate was 8.35%. It's now below 7%. The common timeline of repossession is 60 to 120 days, but it's even shorter if you have a subprime loan. In California, lenders can repossess your car after you're only 1 day late on your payment.
In some states, the banks don't need to notify you before they repossess your car. They have to notify you after.
Including here in California. But you are able to get the car back if you own it, not lease it. And you get up to date on your loan and pay any fees from the repossession. But your credit will take a hit.
Because not only does your credit take dings here and there as you miss those payments, but a repossession can drop your credit score by 100 points.
Which is why you want to avoid a repossession at all costs.
You can also ask your lender for a payment plan, but if you're all out of options, it's best to voluntarily surrender the car so you don't have to pay all those fees that come with repossession, which is very hard to do. But again, you don't want to have someone showing up at your house. And here in California, 1 day late on your payment,
they don't mess
technically,
around.
They can come get your car.
Wow.
And most have GPS, so they can find out where your car at any moment, and then you're like, where did my car go?
Yeah. And another little caveat, if you're buying a car, remember, you're not just having to make those monthly payments. There's the insurance, there's the wear and tear, all of those things. So if you're stretching yourself already, and then if anything happens in your life where the bottom falls out, you quickly get behind on that car payment.
Good advice. Christine, thank you.